I was streaming on TikTok today, got brutally broken even 3 times throughout the session. So, basically, starting up the day, I was bullish. Full breakdown, I wanted to see from here to here, this low resistance liquidity get ran out. And this is also on the 5 minute. You can see that this is a market maker buy model right here. With this being the original accumulation, I wanted to see price come up above it and reprice higher. So we are in the mindset that our minimum draw on liquidity is going to be higher. I want to see the full run of the low resistance liquidity get ran out. So with that in mind, I'm looking for us to hit somewhere up here. So with this, I measure out standard deviation and we have this projection higher. So fourth standard deviation was hit perfectly. Now, people were asking how I project standard deviation and how I use standard deviation. Look at the defined price legs. Like, for example, if I want to use standard deviation on this, I'd do from this high down to this low. But in this example, it's this high down to this low. And I'll just flash my fib settings real quick because I know some people will ask. Now, projecting this from the low to the high of the manipulation range of New York, I'm just looking for full expansion basically because it aligns with the market maker buy model narrative that we have. And it also aligns with the fourth standard deviation. So when we do run this out, what do we put in? At this external high with ES, we put in SMT. So now with SMT at the high and all of our low resistance liquidity being ran out, we are essentially looking for shorts. Another thing that we did on the higher time frame was rebalance this higher time frame range. So we hit our minimum objective. We hit the full rebalance of the range. See? So with the SMT at the high, we can be confident that the power of 3 has been put in. Another thing is, with the 10 a.m., we have something called 4-hour power of 3. With the 4-hour power of 3, it relies on 10 a.m. open. What did we do above 10 a.m. open? We ran higher, we put in a high, we ran out the high, and we put in SMT at the highs within standard deviation. So this, to me, is our manipulation of the 4-hour power of 3. Now, what I'm looking for is distribution lower. So for distribution lower, I want to look for, I guess you can say, I need confirmation that we're going to start delivering lower. This inversion here, this CB right here, or this buy side imbalance turned sell side, basically this inversion fair value gap, we accumulate within it, but when we start closing below it, I have my eyes on this gap, and I'll explain why in a second. When we come up here and reject off of this, I'm assuming that we're immediately bearish, mainly because of this high probability inversion and all the confluences we've stated above, and this whole range is unbalanced. This is too clean of a run up higher. With everything we put in at the high, we have a high chance of a reversal. Now, with a high chance of reversal, we have a high probability inversion. I dropped a video on this, but I'll explain it in short terms. Basically, we use this gap to run out the high. Now, if we inverse it, we can be looking for lower prices. So with this in mind, we have this prominent low right here. I know as a fact, if we run lower, we are at the very least going to run this out. So if we close below here, I'm 100% confident that we are going to run out this low. We can run this out to go higher, or we can run it out and continue lower because it's also aligning with the 10 a.m. So with this in mind, I set my limit here and I went short with 5 contracts targeting 0.5 of the range, right? Thinking of the low resist or just the low hanging fruit, we want to rebalance the range. My problem with this, if I shorted on NQ like I normally do, I wouldn't have been broken even. If I traded on the right pair that my strategy wants me to trade on, I would have still been in on this trade. And of course, I'm not going to feel FOMO. I'm dropping a psychological lecture later today, so just look out for that. It'll be posted on YouTube. But basically, from this, I was looking for lower prices. So 4-hour power 3 is playing out. I don't feel FOMO. I'm not going to throw a fit just because this happened, right? So I'm looking for my next opportunity. The previous trade, what happens in the previous day, the previous trade doesn't affect me going into my next trade. Like for the past 2 days, I didn't have any trade, but today is the day where I have a trade. I have opportunity, so I'm going to be looking at that second trade. What I saw was the first presented gap holding higher. So with this range being unbalanced now, and this liquidity being engineered, mainly because we're putting in highs without running them out, I'm thinking that price is going to make a run to run out this engineered liquidity. Also, let me go back to this one trade. Sorry to flip topics, but one more thing I saw was YM. At the time of the accumulation on YM, we were actively dumping on YM, or on NQ. So look, we were accumulating here, but on YM, I saw it start selling off. So look, 1025, we're pushing lower. I'll show you 1025 on NQ. 1025, we were just accumulating. So I was initially, or always looking for shorts, because I saw the strength of us pushing lower on YM. Now, with that in mind, I'm going to go back to this trade right here. So I want to see higher during this macro. Now, with this in mind, the trade right here was immediately made irrelevant. So a little bit about my model. I was really internal with this, And that was kind of my mistake because I want to see us run out all of these low resistance liquidity. But here, when we ran out this internal high on ES, I noticed it last second that this wasn't going to be a run higher. We are heavily bearish. So instead of running out this high, we end up manipulating through this high for the second standard deviation, and we put in SMT at the high. So inverse, if I inverse this, I would be looking for a long. So when I noticed this, immediately when break even, I knew we were going to dump, and that's exactly what we did. We ended up dumping lower. Now, with this dump lower, I'm glad I saved myself. I don't know how much people would have gotten taken out on that. I'm sorry if you were one of the poor people, the poor souls that got destroyed by this. But immediately when I saw this, I went to go break even. Another thing is YM is already pumped, and there was no follow through on the string. With us running and just pumping on YM, and there's no follow through and just straight accumulation, I'm worried. I don't want to be involved in that. So that was my second trade. Got break even, followed my system, opposing SMT, supposed to get break even. Now, with what I was saying, what I want to be looking for this in terms of standard deviation, max expansion, fourth standard deviation. The whole time I had price marked out, price come here. This is our draw on liquidity for the day. Inside of the TikTok stream, I told you guys, what I'm going to be looking for is essentially, I want to look for a BC to get put in right here, but since we closed below this first presented gap, this is now a what? A high probability inversion, since we used it to run up the high and manipulate. So now we come up here, reject off of the first presented gap, showing that we're bearish and leaving this gap open. Now that we left this gap open, this tells us that this is a breakaway gap. Now, with this breakaway gap, this is where we're supposed to put our stop loss for a trade. And I said exactly, I want to see us create a BC here, then I'm going to short off of this BC. But the only problem with this, Trump is speaking. The Trump speech sucks. We can't do anything about Trump speaking. There is actually nothing we can do about it. I don't like trading when Trump is speaking. But if we use the right logic where the breakaway gap is here, listen to myself and follow my system for, I guess, both of these, and I wasn't afraid of myself or afraid of incurring risk. I think it's just first trade on TikTok Live. I'm just acting up, I guess. We have a trade that's obviously playing out and going exactly according to the logic I'm explaining. So we have this trade here, obviously shorting, obviously dumping off of this. First presenting gap confirmed that we're bearish. Our overall draw on liquidity is bearish. The macro showed us that we are bearish just by running out this high with SMT here. Based off what we're doing in second standard deviation, we reject higher, then when we finally close below, we're obviously heavily bearish. And now you can see we're selling off to the full taker outfit of what would have been a really good trade on this. So it just happens, it's a part of it. Dropping a cycle lecture later today. If you have any questions, hit me up on Discord. See you guys later.